OMS. Reward Risk Ratio, RRR. Reward Risk Ratio is a fundamental component of ETS and OMS. Before opening any position, the price levels to open, close, and stop loss must be determined up front. They are a prerequisite to calculate the reward risk ratio, RRR. Determination of reward risk ratio is a prerequisite before opening any position or placing any order. If you are unable to calculate the value of reward risk ratio, ETS is not for you. OMS. Reward Risk Ratio, RRR. ETS considers that the value of RRR must be equal or greater than 5 to open any position. It means that the probability of gaining must be 5 times higher than the risk of losses. In other words, if we lose 4 trades and gain only 1, our portfolio would still be relatively close to break even. It is essential to understand that the value of RRR constantly evolves with each transaction. OMS. Reward Risk Ratio, RRR. In bull markets, the RRR value is calculated through close price minus open price divided by open price minus stop loss price. Likewise, and in bear markets, the RRR value is calculated through open price minus close price divided by stop loss price minus open price. As already explained, there are 2 types of loss management strategies: stop loss strategy, SLS, and loss parking strategy, LPS. Under certain conditions, ETS is using frequently the loss parking strategy. OMS. Reward Risk Ratio, RRR. Let's assume that we have pinpointed the support price at 100, the resistance price at 120, and the stop loss at 98. The predicted gain would then be 20 points or 20%, and the potential loss 2 points or 2%. The RRR being 10, 20 divided by 2, the position can be opened. OMS. Reward Risk Ratio, RRR. If you open a position at 109, you get a RRR of 1, because the resistance and the stop loss prices are both 11 points away from 109. It means that there are as much probability of gaining than losing. In other words, there is a 50-50 chance of gaining or losing. As a minimum, RRR value below 1 requires extremely tight monitoring of positions. OMS. Reward Risk Ratio, RRR. The closer the price gets to 120, the higher becomes the risk and the lower the gains in RRR. At 120, the value of RRR becomes 0 divided by 22. This is why opening of short positions at 120 may become a new opportunity if the support line is broken and also confirmed by TSV indicator. OMS. Reward Risk Ratio, RRR. Now let's assume that the price reaches 110 points. In this case, the remaining potential gains would be 10 points, and the potential loss, 12 points, 110 minus 100, plus 2. The RRR becomes then 10 divided by 12 is equal to 0.83. It is no longer higher than 5, or even than 1.